Hello, everyone, and thank you for joining today's live stream. I'm Tammy DaCosta from CoinW. So, to get the show started, we just have some important breaking news, and that is with regards to Michigan client sentiment. So, if we look at the data, and this has been a key theme, and if we look at the data, Michigan consumer sentiment, while basically the prelude for March, is coming in at 57.9. Previous was 64.7 and forecast 63.2. Now, what does this actually mean? Well, basically, this is the sentiment data out of the US, which we know is the largest economy in the world. But what does this mean for crypto? Now, today we've seen quite a nice recovery in prices after quite a dismal week. And this morning, as I said, well, just before this data came out, it was actually looking quite positive for the overall crypto market. If we're looking now, and I'm just going to refresh the screen, now we still see prices while I'm looking at the futures on CoinW and Bitcoin, Ethereum, Litecoin, and so forth. Well, let's go to the favorites. They are all seeing positive gains on the day. And what has been driving these gains, or actually what has been driving the losses? So, firstly, we need to discuss, what has the actual price action looked like during this week. So let's just go to some of the charts, and primarily I am going to go to the crypto heat map. As I said, I'm just going to refresh everything to make sure everything's updated. And we're looking at the market performance for the day. Now let's also let's look at the second price as well, the second value as the price, and then let's just do something that's, there we go. So Bitcoin on the day, we see currently, according to TradingView, it's up let's say 2.5%. Ethereum, so we're seeing quite a lot of positivity. And if we look on a weekly basis, this still isn't generally the consensus that we've seen throughout the week. I mean, Ripple is still down 10.73%. Ethereum is down approximately 14%, and Bitcoin 7.61%. So, what does this actually mean for you and I and the conventional, or for those that are actually looking at trends and at markets and trying to decide, where do I go now? So, from here, what do we do? Now, if we're going to see, and we started out by looking at the trading economics or the economic calendar and looking at the Michigan Consumer Sentiment Report. But this doesn't really help explain what's going on in the markets unless you've actually studied economics and so forth. But what this does tell you is the Michigan Consumer Sentiment, it's pretty much based on the survey to say, how does the economy of the US actually look? And if, once again, you actually follow economics and policies and politics and everything, then it might give you like a bit of insight into like the additional geopolitical risks and primarily tariffs and trade wars that has been actually, a main factor or a major driver of price action over the past few weeks, or at least I thought so. But today, if we're looking at those same risks and the tensions between economies, those are still at play. So, what changed today? Firstly, it was the fact that up until a few hours back, we still had while there was a looming potential US government shutdown, which I'm not saying that, well, I definitely wasn't expecting, because it has been deferred, and obviously that would have catastrophic impact on the US markets that have already been under pressure this week. But even so, with that relief, and now that we know that there's not going to be a US government shutdown, a lot of those risk assets, including US equities and including crypto, have actually, they've benefited from it. So it kind of, in my opinion, it shows that actually at the main theme that's going on in markets at the moment is what is expected for the US economy, or at least the health of the US economy. So now, if we look at next week, before we actually focus on Okay, there's also been an alert. The Germany current account reported. All right. So I'm not going to actually go through all of this, but if we look at, while we're looking at the economic implications, why we need to take this into account is because it does definitely have an impact on volatility, at least in the short run. And when we turn back to the chart, I'll show you exactly what I mean in terms of even data this week on US inflation and so forth, how it did cause interim price moves and quite extreme moves in Bitcoin. And that we follow, as we know that, there's been a lot of hype over, well, at least for the past few years, over crypto. But after last year's gains and after everything else has been priced in, now we relying on more those short-term movements and the price action and technical levels to determine where we go from here. So if we're taking into account the high impact events that could cause short-term volatility, we do have retail sales data out of China, the second largest economy, and that's on Monday. This is UTC, so it's early in the morning. And then retail sales from the US economy. And these are the two largest economies in the world. So if we do see those, while we're looking at the forecast, if the actual prices or the figures then come in below forecast, and that shows that retailers are actually, the consumption expenditure or spending has declined, then that heightens fears of a recession, and that tends to have short-term impacts on crypto prices. So just in terms of volatility, these are some of the main things that we need to watch. Then more sentiment data from Germany, Europe's biggest economy. And yeah, as you can see on the screen, there's quite a bit. The focus comes in also on Wednesday when we've got, Bank of Japan interest rate decision, Fed interest rate decision. And here we see interest rates basically that impacts inflation. But as I said, I'm not sure really to explain all of the economics behind it. We'll touch on that as we go along. But these are just some of the high impact data points to watch. So let's jump back to, well, first let's go to Banter Bubbles and let's see what prices are doing there. So if we look here and we look at today, suddenly we're seeing with crypto, there's a lot of green, and that's not the picture that we've been seeing for the past week. Bitcoin 1.59%, trading higher here. So Trump is 12.57%. So optimism is coming back through there. And now we're seeing green on the screen. Whereas from a weekly basis, we see that the picture is still quite dismal. It's still quite a bearish outlook. And this pretty much, well, to me, it solidifies the fact that all eyes are still on the US. And if the US economy is perceived to still be able to remain resilient, then there's still potential for a more bullish move in crypto markets. But that is still something that we're going to need to keep an eye on going forward. So now let's have a look at stocks, because we've spoken about the correlation before, and we have seen that with regards to some of the big tech stocks like Nvidia, and just as a whole, if we look at the monthly picture, we see Nvidia still is down 9.42%, Amazon 14.71%, and these are really, really big companies that have been key drivers in actually fueling both the bullish rally in the NASDAQ, and so the top 100 tech stocks in the US, in the NASDAQ, and plus in the S&P 500, which also serves as a global benchmark. So now let's simplify this and I'm not going to, well, I'm going to try not to get ahead of myself. So if we look at, today's prices, we can see that a lot more green is once again on the screen, which is positive for the stock market, and it's also positive once again for crypto. So now let's go and jump into some of the charts and look at some of the price action. Okay, so this is from the CME, because we know that currently Bitcoin is actually now it's become it is traded on a regulated exchange, which is the Chicago's Mercantile Exchange. Now, if we look at the price action at the moment, okay, let me just change my view. Ooh, and we're not doing this. Okay, this is producer price index. I'm not looking at that. So let's go back here. Okay, I've lost this. But anyway, so now if we're going and we're looking at what has happened with Bitcoin, and we just look at throughout this week, and we see, okay, exactly what is, what has the price action been? Once I manage to change this, or let me just share my other screen, then we'll be able to actually see what is going on here. Let me just start this again. Okay, I apologize for that. So if we have to look at what's been going on in the crypto markets, and we look at, okay, we're going to look at the closing prices. So now the thing with this chart is you can see it's got no wicks. So I'm looking at purely the opens and the closes for the day. But let me just quickly change this, and then we are going to walk through exactly, okay, what does this actually mean for markets, and where do we go from here? How do we actually trade in these volatile market conditions, and when there's still so much uncertainty? And this is where we also want to know that there's that we're protecting our capital to a certain extent. So, okay, now we're going to add the wicks, and this tells us the high and the low prices, as well as the open and closes. So if I look firstly at the weekly chart, and this is for Bitcoin, and I am looking, okay, this is at the closing price. So let me change this. And this serves as a guide for me to see, okay, what are the important price levels. But if we're just looking at the price action, and we're looking at Bitcoin throughout the week, what we can see here, and what's clear on this chart, is that from here, from the 4th of November, the Friday, to the 11th of November, well, something may have happened, but prices definitely responded. And we saw that jump in prices. Since then, we had a bullish uptrend and then hit a peak, and then we saw a pullback. Now, what's interesting here is once again, we've seen some of that fear driving prices throughout this week, but this wick over here and the fact that now prices on the weekly time frame are looking to close, if obviously, well, they still, there's still quite a bit of the trading session that's left. But if we're looking at the weekly close and we're taking into account today's closing prices, if price action continues to trade as it is today, then we're seeing that prices are going to close lower for the week, but it's still at the near the top of this candle. So this gives us some bearish sentiment after some bullish sentiment, after a very bearish week. So for now, we're saying, okay, cool. We've had a lot of fear in the market, which we can still see, from the fact that there is still a gap between last week's open, which was there, the close was there, and we can see this week's open. The fact that this candle is red means that the closing prices or markets are set to close for Bitcoin at a lower level than they opened. That's why it's red. But the fact that this is marginally less than the size of, if we had a full red candle, that still is giving us a bit of bullish sentiment as to, okay, fine, prospects for the economy aren't actually bad. And this could be a really crucial point in terms of for us to actually see what the next steps are. So if we now go to a shorter time frame and let's go to the daily chart, then we can once again, we can see that, okay, fine, there's this period over here, or we can see that prices, the candles and everything, they've attempted to break below this level here, which occurred after the US Trump election, but they haven't held there. So for now, this level now plays as critical support. And to me, this is going to continue to play as a crucial both support and resistance level. And that would be on the Monday following the Trump election, or at least announcement. And this was at a level of 81,210. So this level, as long as we're still above 80,000, or at least we're remaining above 75,000, we can't still rule out bullish continuation. So that's quite a bullish, or at least that gives us some reassurance with regards to Bitcoin, which remains the dominant. It's not only the largest crypto in terms of market cap, but it's also the dominant coin at the moment. So now let's look at other coins and let's look at what this actually means for the broader crypto market. Now, if we look at the dominance indicator here, Bitcoin is currently at 61.1%, Ethereum is at 8.5%. If you do follow altcoins, you would know that Ethereum, well, if we look at the altcoin season index, it is only 16 out of 100. So altcoin season is still not here. We're still going to need to wait a while for a bit of confirmation, or actually quite a lot of confirmation, as to when the trend may be reversing and favoring those altcoins. But for now, Bitcoin season, okay, so it's 16. So we can see that Bitcoin is still dominating. Okay, so according to CMC, the altcoin season index, that's at 18. So we can still see that. And if we look at the altcoin season chart, we can still see that altcoin season, the prospects of an altcoin season has been deteriorating. But now we're seeing that maybe there may be some leveling out. However, I do think that there's still, it's still more a cautionary picture on the horizon. So, what does this mean? And what does it mean for markets if we're going out to, next week? And for those that are actually trading, whether you're holding long or short positions. So now, if this looks at the 100 index constituents, and we're looking at the top 10, once again, we can see, okay, Bitcoin is trading higher in terms of 24 hours, the price change. But then we see something like Chainlink that has actually really, really benefited over the past 24 hours from that change in sentiment. So this all matters, but it does become a lot to actually try, keep up with and to try and monitor all these different factors. Now, when we're looking at the crypto fear and greed index, for me, this is also a very, very important component to follow, because this kind of tells us trader psychology and psychological behavior. And following the Trump election, and even going, from the August lows where we saw crypto take some strain, we could see that the fear and greed index really, really rose, and we could see it entered extreme greed, that territory, and that really, really filtered through, I would say, still till January, when Bitcoin actually reached its high. Since then, now what's happened is we've now entered into extreme fear, and this could also be an indication of maybe the fact that, yes, we have had a lot of fear with regards to Trump tariffs and the economic outlook, but maybe things aren't as bad as it seems. So in this territory now, we get a bit of a different picture, and a different, basically this becomes a potential dip in the market and maybe a potential buying opportunity. Because now that we know that we've been in extreme fear, and one of these indicators that we can use is something like an oscillator, like the commodity channel index, or even the relative strength index, or like, a momentum oscillator, basically. So if we're now looking, and let me just take out volume, if we're looking at for something like the RSI, the relative strength index, this represents the momentum. There was a strong momentum of the bull trend, and now we've seen that there's been the momentum has been actually favoring the downside, hence why it is trading downwards or sloping downwards. Now we've seen that, okay, it's nearly reached the bottom or the lower boundary of this line, and now we have seen an uptick. So this gives us, even though there is still a bearish momentum in play currently, this tells us that, okay, the momentum of the bear trend now is losing steam. So we can maybe, or it's possible, that we can expect a broader recovery. But everything depends on if there's going to be more filtering out of those recession fears and so forth. Now, so for Bitcoin, my solid support lines, well, basically primary support, I would still say, is at 80,000. The lowest support line there is 75,000. If prices break below 75,000 and then actually break this level here, 74385, then I'm expecting that there may actually be a further pullback, and that we may actually see a dip to 70,000. So those are the levels that I'm looking at the downside. For an upside move, however, I'm still looking for a clear break or a hold up above, it would be this level here. So let's say above 85,000 in order to prompt the potential for a further bullish continuation and maybe a broader recovery. Now, I think another important thing we need to be aware of is the fact that Bitcoin still drives the crypto industry. So often, if Bitcoin is sliding down, and this is still in institutional adoption and so forth, and even in terms of a strategic reserve, Bitcoin is still the prominent player. So what happens in Bitcoin matters. So if this trend does actually have a broader recovery, then it could also open the door for other altcoins to follow, and that would give a bullish reprieve to a lot of those altcoins. And it could open the door for altcoin season. I'm not really too, but this is just me. I'm not really too optimistic about that in this quarter, but I could be wrong. I just think there's a lot of trade uncertainty with what's going on in the political environment. But once again, we also need to decide what factors are we actually looking at to determine whether we are going to, basically what our crypto allocation is going to be. So that is for Bitcoin. Now, if we actually go to the something like Doge, we can also see that prices are trading 3.17% higher, and that's good. Solana as well, that's also been taking strain, and then XRP and so forth. So we see that these coins are also benefiting, and there's a lot more green on the screen. The gold to Bitcoin ratio has also now fallen, and that's because when investors, it becomes their flat or flat, and gold benefits from those recession fears, and it has been benefiting. But now that it's come lower, today we see that from a risk-off environment, it's now changed, and we more risk on, because that government's shutdown has, at the moment, temporarily, the fears of a shutdown have faded. If that now holds, or if this optimism holds, then let's look at something like Ripple, and let's see what happens in terms of Ripple's price action. Now, for Ripple, we can see a similar, we can see when there was the announcements of the strategic reserve, that explains this bull candle there. And then we had, a pullback. And once again, this week, we saw that prices did also fall quite low. And they got to a low on, there we go, on Tuesday of 1.89. Since then, there has been a recovery, and now we've seen that currently the prices are trading back above the key $2 mark, and actually they're trading above a prominent resistance level, which was prior support, and this was at 2.2675. So now for short term, instead of a bearish outlook, we see potential bullish continuation. But as I said, a lot can still happen over the weekend and then into the Monday session. So from this outlook, I'm still looking at $2 as support for Ripple, as potential support. And then on the upside, that $3 mark would still be key resistance. But in the interim, I'm still shooting maybe like 2.5 to 2.7, those areas are still really, really important. And we need to see a build of momentum above those levels to constitute a potential resumption of that bull trend. Okay, there we go. So these are the areas that I'm looking for Ripple. All right, so that would be this area here is there we go, 1.9550. But that's more short term. And then let's see this one over here. So put 2.2113, and this would be for the short term support, and then a break of that could see further downside, potential, and that would be to the $2 mark, and then potentially to this week's low. So if we're looking at even for Ethereum to me has really, really been a underperformer. But Ethereum is also benefiting today. And that is not obviously that's a really good thing, especially for altcoin season, or if it's going to propagate a altcoin season. But as a whole, we can see once again, crypto bulls look to be back. And even though we've got a lot of uncertainty in the background, as long as, in my opinion, as long as the US economy is still perceived to be resilient and strong, then I think risk assets could actually be offered a lifeline. However, there's still a lot to be concerned about, a lot to be vigilant of. And so today, if I can offer one word of advice, actually two, it would be risk management. So even though there's a lot of uncertainty and there have been a huge the percent moves that we've been seeing on a daily basis have been massive because of the volatility. We realize that, especially if we're trading with leverage, it opens the doors for exponential amounts of gains, but it also opens the door for an exponential amount of losses. So you need to just be vigilant of also your risk management. How much capital are you actually willing to lose under any circumstance? And then from there, just make sure that your portfolio is diversified and that you pretty much know exactly what factors or price levels, whether you're practicing technical or fundamental analysis, just know, okay, fine. Just know that the emotional reaction and impact during times of losses is proven to be a lot more than the emotional impact of gains. So those are just things to be vigilant about. And whether you're trading altcoins or Bitcoin, or you're just looking for general knowledge, next week is still a very big week. For now, we're ending Friday on an optimistic note. And it seems like all those fears, as I said, if there's a government shutdown of the US, then that ripples through to other markets. For now, the chances are we avoiding the government shutdown, which was actually due to take place tomorrow. But there's still a lot of other risks with regards to tariffs and trade wars, and a lot of things happening in the background that could definitely still impact prices over the weekend, since crypto does trade during the weekend. And over the past few weeks, that's when we've actually really, really seen extreme price moves. Okay, so I'll be back on Monday. Thank you all for listening, and I will catch up with you there. I hope you have a great weekend and be safe and happy trading. Thanks for listening.